Imagine this for a second. A really unique property, kind of nestled away in the beautiful rural mountains of Andorra.
Mm-hmm.
Now, what if you could actually own a piece of that? Not with, old school paper deeds, but through something totally modern digital tokens.
Yeah, quite a shift.
Welcome to the deep dive. Today, we're really digging into the world of tokenized real estate.
Right.
We're specifically unpacking a recent real estate property token analytics report for a place called Circles Andorra.
Yes.
Our mission really is to cut through the complexity, give you a clear understanding of this specific co-living property, how it's structured financially, and the bigger market picture it sits in.
Exactly. You'll walk away from this deep dive, hopefully, with the key takeaways. How a property like Circles Andorra gets its value, the details of its tokens, and maybe most importantly, what you really need to think about with this kind of emerging asset class.
Let's do it. So first up, let's just get familiar with Circles Andorra itself. This isn't like your standard apartment block.
No, definitely not.
It's described as special purpose, co-living. That special purpose bit seems important.
Yeah.
It suggests it's built for this model.
Yeah, precisely. It means it's designed, probably Zone 2, specifically for this unique operational style. Think communal living, shared stuff, maybe shorter stays, not your usual long-term rentals.
And the location. Sounds pretty nice. Rural Andorra, specifically Herb, Terra Plana, Sant Romà, Imarge, Sant Julià de Lòria. So quite specific.
It is. And what's interesting is the physical building itself. It's brand new, basically, only a year old. Condition listed as excellent.
Okay.
And it's clearly built for how people live and work now. It's got 76 co-living rooms, plus a good number, 60 co-working spaces.
Wow. Yeah.
So really leaning into that flexible living, remote work trend we're seeing everywhere.
That makes sense. Very forward thinking. But the report also mentioned it's currently under renovation. What does that actually mean for how it's doing right now?
Well, it means what you'd expect. Occupancy is 0% right now.
Right.
They don't expect positive cash flow until the end of year 1, according to the report.
So for someone looking at this, potential risks there, delays maybe.
That's the main thing, yeah. Renovation delays or maybe costs running higher than planned. If the timeline slips or the budget blows out, that directly hits when you start seeing cash flow, and it could affect the overall return. It definitely shifts the immediate risk away from finding tenants and more towards just getting the renovation done properly and on time.
That's a really key point. Okay, let's switch gears a bit to the ownership side. Report says it's company ownership. 5 owners hold 20% or more.
Mm-hmm.
It mentions a cumulative ownership duration of 2.25 years, but an average of only 0.45 years. And one owner has nearly 30%.
Mm-hmm.
What should we take from that?
Okay, looking at those numbers, the cumulative 2.25 years might suggest some collective history or experience in the background.
Okay.
But that low average, 0.45 years, means the current main players haven't been involved with this specific project for very long on average. Could be a mix of experience levels, maybe. And yeah, that 29.14% concentration, almost a third with one owner. That can be good for quick decisions, streamlined action, which helps in development.
Sure.
But it also means that single owner's vision really drives the bus. That impacts everyone else, all the token holders. So it's efficient, potentially, but also concentrated power.
Okay, so we've got this unique co-living spot in Andorra. It's being renovated. Ownership is fairly concentrated. Now, the really kind of revolutionary part, how you actually get involved, digital tokens.
Yeah.
Let's really unpack the tokenomics. How do these BSPT tokens work?
Yeah, this is textbook real estate tokenization. Basically, you can buy digital ownership through these BSPT property tokens.
Okay.
They've capped the supply for sale at 16,000 tokens out of a total of 100,000, and each one is priced at $33.33 US.
33.
Yep, so it allows for that fractional ownership, makes it potentially easier for people to get into real estate investing without needing huge amounts of capital up front.
And this is where I think it grabs a lot of attention. The return structure. The report says 5% guaranteed return for the first 2 years.
Mm-hmm.
Then from year 3, it's 5% guaranteed plus up to a 10% premium. First payout due December 2025. Estimated APY is 5%. That word guaranteed, it sounds great. But what does it really mean here, especially with digital assets and property?
That's a fantastic question. And yeah, absolutely crucial. When they say guaranteed, it's a commitment from the asset operator, the company running the property.
Okay, from them.
Right. It's not typically backed by, say, an external insurance company or some government scheme like a bank deposit might be. It really hinges on the financial health and the operational success of the company itself to actually pay that out.
So the guarantee is tied to the operator's ability to perform.
Exactly. For the first 2 years, it's that fixed 5%. Year 3 onwards, you still have that 5% base, but then there's potential for more based on how well the property does. So yeah, it's a strong promise, but the actual solidity of that promise long term is directly linked to how accurate that initial property valuation was and how successful the operator is down the line. It definitely puts a lot of emphasis on trusting the issuer.
That's a really important distinction. So the guarantee is basically as good as the company making it.
Sure.
Let's look at the property's finances then.
Yep.
It was bought, what, 0.45 years ago?
Yeah.
For $3,333,081.
Yep.
And the current verified valuation is listed as the same amount, $3,333,081. And this seems key. The valuation source is owner estimate.
Yes.
What are the implications there? Especially when you put it next to that guaranteed return we just talked about.
That owner estimate is a big flag for anyone doing their homework, their due diligence.
Right.
It means the value isn't based on an independent third-party appraiser coming in and giving an objective market assessment. An owner knows their property, sure, but an independent view is different.
Of course.
So when you pair that owner estimated value with a guaranteed return, well, it raises the question, what if the real market value is actually quite different? How does that affect the operator's ability to keep making those guaranteed payments, especially if they needed to sell or refinance down the road? It puts more onus on you, the potential investor, to really scrutinize the operator's credibility and finances rather than just relying on an external valuation number.
That makes perfect sense. Okay, what about debt? The report says 2 debt facilities, one senior, one junior, secured by the property, and the loan-to-value, LTV, is less than 35%. Now, instinctively, a low LTV sounds good. Less debt, more equity buffer. Sounds conservative.
It is. Very conservative.
But for something that's being renovated, 0 occupancy. Could a low LTV also maybe hint at something else? Like maybe traditional banks were a bit hesitant because it's tokenized or because it's co-living, or is that reading too much into it?
That's an interesting thought. An LTV under 35% is remarkably low in real estate. It definitely signals a very conservative stance, low leverage, which fundamentally is good protection for token holders. Gives a big cushion against market dips or unexpected costs, makes the investment feel more stable.
Okay.
Now, could it signal lender hesitation? Possibly. But often in these newer tokenized deals, a low LTV is actually a deliberate choice by the operators. They want to show strong equity, reduce financial risk, make the whole thing more attractive to token buyers. It gives them more breathing room.
Got it. Okay, let's zoom out even further. The report touches on Andorra's national economy. It says over 22 years, average inflation was like 63% lower than the global benchmark.
Yeah, quite stable.
And GDP growth over 20 years was 55% lower than the global benchmark. So again, sounds stable, maybe less volatile, which seems good for property long term.
It certainly points to a very stable, less dramatic economic climate compared to, say, global averages.
Yeah.
Lower inflation, steadier, albeit slower growth, it suggests a mature market.
Right.
And for an investment offering a guaranteed return, that stability can be a real plus. Reduces the big macroeconomic shocks that could hurt the operator's ability to pay.
But does that stability maybe cap the upside? If you're getting a fixed return, are you trading off potentially huge growth for that predictability in a market like Andorra?
That's the likely trade-off, yes. Predictability often means less potential for explosive growth. The property itself could still appreciate, of course.
Sure.
But the overall economic environment suggests it's probably not a market prone to rapid speculative bubbles. So the core return you might expect is likely weighted more towards that guaranteed yield rather than massive capital gains driven purely by the market zooming up.
That paints a really clear picture of the potential give and take. Okay, now, really important for everyone listening and taking this in, let's talk about the fine print. The sort of key things you need to keep in mind with a report like this.
Absolutely.
The report itself states very clearly, it's for informational purposes only. It is not investment advice.
And that's a critical point to really internalize. Tokelytics, who put the report together, might verify some key data points they get from the asset operator. But it's the operator, the company running Circles Andorra, who is solely responsible for saying that the information they provided is valid, complete, and accurate. Tokelytics isn't doing an independent audit or guaranteeing those specific data points themselves.
So you're relying quite heavily on what the operator tells the report compiler.
You are. It really highlights why you need to dig deeper yourself or get advice.
Which brings us right to the bottom line for you, our listener. This report, it's a fantastic tool. It gives you a big head start, a shortcut to getting informed, but it absolutely does not replace doing your own homework.
Precisely. You are ultimately responsible for doing your own due diligence. That might mean talking to professional advisors, financial planners, lawyers, tax folks, accountants, whatever is appropriate for you before making any kind of decision. This report gives you a great framework, a lot of information condensed, but applying your own critical thinking, especially around things like that owner estimate valuation we talked about, or the real nature of that guaranteed return, and potentially seeking independent advice that's still essential when you're dealing with new kinds of digital assets like this.
So we've really covered a lot of ground here in our deep dive on Circles Andorra. We've looked at the physical property itself, this co-living space taking shape in the Andorran mountains, the mechanics of how its ownership is tokenized, those financial promises like the guaranteed returns, and we've placed it all within the wider economic picture of Andorra.
Yeah, it's a fascinating case study. It shows how traditional real estate is being, well, reimagined through tokenization, offering these new ways to own fractions and potentially earn returns. Which leaves us with maybe a final thought to chew on. You have this property offering guaranteed returns, which is attractive, but it's balanced against a valuation provided by the owner, not an independent source, and a debt level that signals conservatism. So what does this specific combination tell us, maybe, about how risk and trust are evolving in this new digital age of investing in property?
That's a great question to leave people with, something to really ponder as this whole area continues to grow and hopefully mature.